Good morning, everyone. Microphone check, screen check. All right. Looks like everything is working correctly here. Welcome, welcome, welcome. Good morning, SSFTG family. I hope you all had a chance to rest up and get ready for the day ahead. Pardon the absence yesterday. My daughter was sick. Just no bueno. But today she seems like she's doing fine again. So I think it was just a one-day bug, and thank goodness, right? So that had the room closed yesterday. Thank you for the well wishes in chat. I appreciate it. As per the usual, before we jump in, make sure to read through the morning prep PDF on the right side of the screen there. Very important to understand everything that is inside there. And then just a quick note for you all before we jump in today as well. If you're watching on the YouTube side of things, the stream does have between a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Hey, good morning, Stephen. Everybody else, welcome, welcome. Don't be shy, don't be shy. Come on in. It's Friday after all, come on. Made it back for the end of the week, right? All right. Just want to take a second, like we do every day, to thank all of the new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm pumped to have you on all on board the SSFTG family one way or another. If you aren't a member yet, you do have a few different options to check out if you're looking to further your trading education and career. One of the easiest ways to jump in the family is right here on YouTube. You can check out the join button below the stream, which gets you access to the extended hours room, where we continue on from the morning room with a little bit less delay, actually quite a bit less delay, to the end of the session. YouTube members also have access to the communities area, where I post all kinds of different chart setups, stock charts, analytics, and more. And of course, every member gains access to the Discord chat server. And of course, on YouTube as well, the cool thing there, you get the awesome badge next to your name to show your support, and it just looks really cool. Plus, it's $5 a month. You skip a coffee from Starbucks and you're set. If you want to take a massive step further in understanding our trading approach and what I'm doing every day in the room, look no further than the Day Trading Academy. Side note, in the Academy, we've got some really cool updates coming out. If you haven't seen them yet, we've got Unit 4 coming out soon, so pay close attention to that. I'll let you guys know when that drops. But anyway, this is where you can learn how we do everything. But listen, this isn't a little PDF guide that you're going to finish in an afternoon, all right? Yeah, we do have a quick start course, but if you really want to dig in, like the Academy does, you're looking at about 19 plus hours of video course material, and that's going to grow here in the launch of Unit 4. Alongside the course, we also have homework, study guides, and that way we can really make sure that you're understanding what's going on while you navigate the course, which I review personally. And of course, you get the DTA upgrade discount, which is incredible. And then there's the top floor, the executive suite. That's where you're going to find the VIPs. VIPs have permanent access to all that is SSFTG, and bonus side there on the VIP side, VIP exclusive. We've got a drop coming for them too. The VIP private reserve. You'll see that in the VIP section. Those are still in the works, but look for those soon. All right. So just keep that in mind. But as far as VIPs go, the Day Trading Academy, private Discord chat, futures updates, new strategies, monthly webinars, one coming up this weekend, one-on-one access, and everything else, it all comes as part of the package. VIPs gain access to the fully dedicated non-delayed stream for the entire session, meaning that they're on the fastest connection you can get without any delays from start to finish. So whether you're here for the very first time, or you're one of the VIP vets over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what's going on for today as we move into the day ahead. Summer holiday Friday, yeah, exactly. So as far as things are concerned, of course, don't forget to grab your morning DP levels. Those are posted for you this morning for the major 7. NASDAQ, S&P Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. As far as the news calendar is concerned, we don't really have a whole lot going on. How's it going, Ace? Welcome. It's a Friday, right? We know that Fridays typically don't hold a whole lot, and if they do, it's pretty early in the morning, and the first news announcements don't happen until 9:45, so check that one off. The first announcements, although they are medium, they are still there at 9:45 manufacturing PMI for July. The forecast is 62. After that, market composite PMI also at 9:45. But that's it. Services PMI forecast is 64.8. I mean, who knows? Maybe they move things, maybe just because there's nothing else. It's something to consider, I guess. 945 is it. At 1300, we have the U.S. Baker Hughes oil rig count, typical Friday stuff after that, CFTC, crude oil speculative net positions, all the speculative net positions at 1530. So, not really much else going on after that. Hey, Zach, how's it going? Maybe not even going to take a trade. One of the tools we have is we don't have to trade. I know, exactly, right? It's a fantastic tool. It'd be amazing how much better off we'd be if we would use it more often. How do we find the news live? Is it a subscription? Yeah, you can get news subscriptions if you want. There are some really big names in that, but honestly, I find using Financial Juice. I'm not sponsored in any way. I just like their stuff. Financial Juice has one. But I do think that Financial Juice actually just went recently to a subscription basis, and now the news is delayed. It didn't used to be delayed, which is a bit irritating. But again, a slight delay, 5-10 seconds. If you're not trading the news, then one of those is totally fine if you're trying to listen in for it. That would be Financial Juice. If you have a subscription to Thinkorswim, or an account with them, if you have an account with Thinkorswim, you do have access to Benzinga Squawk. I don't know, though, if I don't know if he still talks during 9:30 or what he's doing. I haven't listened for a little while. But there are some definite free alternatives out there. I'm cheap. That's in my blood, what can I say? So, the only reason I would say that you would need a subscription to something would be like if you're trading the news announcements, then definitely, different ballgame. Let's jump over and check out the S&P first, and we'll talk about the NASDAQ in a minute. What a feisty bugger that is. We've got the S&P with continuation to the upside, and man, I tell you, this 15-minute chart, if you were to zoom out and look at a 60-minute chart, this 15-minute chart is looking very similar to what this looked like over here on the 60-minute chart. And, well, wait a minute. If we go back to a 240-minute chart, this looks very similar if you go back a little bit further. Let's go, 180 days. This looks very similar to the last couple times that the market started rallying here. We've got some really eerie similarities here. Eerie kind of being a loose sentence here. I don't think it's really that much of a surprise. When we're looking at what's going on here, we really have to keep the longer term context in kind of the back of our heads here. Because if we're looking at from the top down pullbacks, the major pullback, well, I say major, it's a 4-hour chart. The value pullbacks are about close to 5% on the bigger side. On the lower side, 3.25%. The last pullback, this drive down, was 3.8. The last drop before that was 3.5, and then you've got this big old Hummer here at 6%. That's obviously a double value. So if we're looking at these as far as value pullbacks on the S&P, there are a few that are a bit deeper, closer to those 5-6%, but most of them tend to be around 3.25%, 3.5%. This one dug a little bit lower, 3.8, but it's a value pullback. Buyers bought the dip. And every time they've bought the dip historically, it goes up pretty aggressively, and usually not just for one leg. And if it is a 3.5% pullback, the follow-through can be insane. But this is a wave 3 in the middle of a 5-wave sequence. Our expectations have to be realistic here as well. So if we zoom in a little bit closer for those expectations, we are getting a very sharp reversal off of the lows with a continuation back up. As far as this continuation back up goes, we've got this first cycle up, wave 1, wave 2. The further move up, this does qualify. It's a 1.38. Perfect. I mean, right out of the textbooks. We did continue a little bit further up, so maybe this was a continuation of the 5 legs. But, I mean, let's be realistic here. What do we have? We talked about this a lot the last time. Wave 2, very simple, very direct, very concise. Usually tells us, doesn't have to, but usually tells us that wave 4 is going to be a train wreck. Well, I mean, if this was wave 4, that was pretty decisive. That doesn't make sense. That one also doesn't make sense. This all still looks like we're part of wave 3. I don't think we've stopped. which means that we still have more higher highs to go, even if it does pull back. Those pullbacks could be pretty big. We are skimming off the top, that's for sure. But, in terms of different locations, we've got value pullbacks off of the dip was an L3. Usually after an L3, the first major pullback is an L1. They got that, obviously. And went screaming higher up. We've got another L1. It's going screaming back up. We don't have another one yet. Guess what? Triple up L1. We're waiting for it. That's the next setup. Again, it tells us that we should be waiting for a pullback. But, at least a bit of a corrective phase back down to these zones of support. That's going to be the zone of interest. And that also lines up nicely with a half DP down. We're starting to stack some probabilities. So S&P, a little bit high and lofty up here, but if we can get a bit of a pullback, buyers will be, they'll be looking on that dip. My concern, and this is something I've been talking about in a long time in the indices, and I'll switch over to gold so that I don't get stuck on the indices for too long, is that this rally up seems like they're in a real big rush, a real hurry. Like they're trying to just rip this thing to the highs. And a lot of times when you get that feeling, it's more that parabolic top before an end. But trying to call a top on a market that's just persistently screaming away through the highs is just a loser's game. It's just something to note, to keep in the back of our minds, that if we do start seeing those bear bars stack up, and we'll talk about the continuation on the daily on the NASDAQ, there's some big clues as far as what to expect. Anyway, switching over to gold before I go off on a tangent. We've got predominantly sideways price action. I mean, there's nothing really else happening here on gold. If we look at it from a POC perspective from the bottom to the top, give us a minute. We did have that POC, which was top-weighted up at the 1806s. Now, I say was top-weighted because the market was trading above it for a while as well. If these were, longs and they were in profit, that's a great place to be. But if these were shorts and they're still in negative, that's a really bad place to be. So when the market starts coming back to that, I want to see, how does the market respond? Are these shorts? Are these longs? What are they doing? And when the market comes back, it dives back through and gets a momentary bounce after piercing through the 1806s. Well, that would tell me that a lot of traders, if they were looking to exit a break even, maybe got a bit of icing on the cake. Assuming, of course, that their average is at 1806. That number could be wildly different depending on what they've done for their averages. But the assumption here is that it's at 1806. So with this drive down, then I've got to look at it like, well, wait a minute. If we're starting to come back into their territory and they're not bouncing back to the upside as if they were exiting a break even and really running for the hills, then are they going for a scalper's target, right? What are they going for here? And if we draw this just a bit further forward to where they finally got, guess what? The scalper's target finally filled. Now, this is very interesting because why would a scalper's target and a bounce here contextually make sense? Well, if these were longs and they were underwater, they tried to re-up, it failed, now they're back underneath and they're retesting from the bottom side. That could potentially be a big problem for the bulls. But in the bigger picture, from the context side of things, right, these could be these sellers who have been building in for a really long time, got shoved way against, they've finally been given an opportunity to get out not only at break even multiple times, but also finally at their scalper's objective. Now, the fact that we've seen this kind of responsiveness off of the scalper's objective, I think, again, I don't believe in coincidences, right? Not in the markets. That doesn't happen. This type of reversal off of this low, there are so many other things. I mean, there's range lows, there's 3 press bottoms, there's a bajillion different reasons why traders would be buying down here. Both sellers taking profit and new buyers trying to pick up the lows. It's logical to see it bounce. The thing that we need to see here, though, before we can really say that the bulls have taken over, because this is just the assumption that sellers have begun taking profit. Let's see where the POC's at, right? Where are they on this pullback? Oh, okay. Now it's starting to make sense. And for whoever just logged in right when I was in the middle of that, welcome to the party. I heard the little ding. That was funny. We've got this 1804.3 zone, which again is their break even. And guess what? We're right back on top of. We're right there. So sellers are trying to pressure back off of this 1804.3. And I'm not saying they can't win. They definitely can. Remember, we're just talking sellers taking profit. But If they fail and we roll back up, it's game over. Okay? It's game over on a multitude of spectrums. It's game over on the bigger picture from the sellers having an attempt and failing, and on the shorter picture with the longs gaining ground. That's a massive structural failure if they start breaking back to the upside here, especially above the 1810s. So, I mean, right now the bears have it. They are on a slippery slope. So let's make sure we do our typical eyes out. Keep our eyes open. As far as crude oil is concerned, we're not concerned. What a what a wild thing this is, huh? So if you were to zoom out in a wider time frame, looking at something like, I don't know, a 60-minute chart, maybe even, I was going to say maybe even a 4-hour chart, because they spent an entire day there. It might even have to be a daily chart, given that. We've got basically a twin reversal, or if you go out far or close enough or far enough, it's a V bottom. That's all a twin reversal is. You just zoom out and zoom in close enough, you'll see the difference. So zooming into zooming out to a 4-hour chart, this is looking very apparently like a V bottom. But if this is going to be a V bottom, they have to break where the V started. That is not even close. That's back up in the 75s. So, I mean, crude oil's got some huge territory to cover if they're going to try to get this thing going back up. Now, the one caveat that we do have here, if we go from the bottom all the way to the top of this most recent rally, the impulse POC, and we see where they all stacked up, and as we learned, the minute versus tick can be different in terms of POC, so I'm going to let this load tick just to be safe. It's going to take a second longer, but I've got to be able to trust it, right? If you weren't here for that yesterday, we found out that the minute-based POC and the tick-based POC can sometimes flip-flop. So that's a bit of a concern. Got to be able to trust it, you know? If you have no idea what I'm talking about, since this is going to take a century and a half to load, I'm talking about the resolution here. Having it set to tick means that it looks internally on every single tick. It takes forever to load, but it's a lot more reliable. So, okay. So we have a POC down here at 58.66. Now I'm just out of pure morbid curiosity, because we know that POC is here right there. Let me switch this over to minute now. Okay, that one didn't change. Good. Now I don't know if anything else visually changed. I was only watching that, but just double checking, keeping it in line. So as far as the as far as this overall movement is concerned, we've got a major POC, which is way down here in the 58.65s. This, if it is diving back down, could be looking for larger objectives, right? So if we're looking at this from an Elliott wave perspective, is this an impulse to the downside? Well, let's qualify it or disqualify it. We have the first wave 1, wave 2, maybe. Let's drive down. There's wave 3. Wave 4 cannot come in wave 2, wave 1, right? Well, it did. That means that this doesn't count. At the very least, this may just be a significantly wider wave 1 before a larger break, maybe. Or this is simply just an ABCD correction, or maybe even a complex 5-wave inside correction, whatever. But either way, this is disqualifying the impulse to the downside, which means they might not be able to reach out to these 58.65s. These longs may stay long. Some other considerations would be if we're looking at from the breakout point, where the market really broke out above and rallied up. The pure impulse. Not something that I typically look at too much. We can see that it did dip back to the base of that impulse leg. But that POC landed up at the top. So the reason why I want to see this is the assumption for this POC would be that this is profit taking, right? It broke out to the upside, we know is successful. Where do the buyers take profit? I say take profit because the market fell underneath it so aggressively that must have happened. So we've got our assumption that their POC, their profit-taking point, was right there. And given that it tried going above it so aggressively, when it dove underneath it, bounced off as support, now we're under it, I'm expecting this area to be a bit of a brick wall. We don't have the V-bottom completion yet. They've got a lot of work to do, and, well, I mean, realistically, it just makes a lot of sense that we see the 72.90s act as a very troublesome spot. This looks really nice and aggressive to the upside, but they might be running out of steam. They still got another dollar to go, though. You know, so we got some room. We got some room. On the 15-minute, just a quick look at it. We've got that first leg up, wave 1, wave 2. This could be wave 3, and I mean, it was kind of gross, and it took a long period of time, so I mean, maybe, but none of these really fit the bill too well. This could all just be that larger sequence because they're looking for the bigger upside move. Over on the euro, still a train wreck. Nothing really happening. Buyers buying off the lows. It's not like this isn't a surprise, right? Everybody knows this thing's in a range. Buyers are buying low, sellers are selling high, and they're just kind of stuck. The big thing that we've really been waiting for is, going back to the larger picture, is the POC shifting. Have they done enough work down here to actually shift the POC? And just for the sake of time, I'm not going to trade the euro, so I really don't care if the POC is a little bit weird here. The major POC 1.22030. This is, I mean, it's a pretty straightforward thing here. They haven't done enough work down here to shift the POC. We can see some very obvious, definitive points that stand out. 1, 2, and 3. And that's important because if they do shift the POC here and the market begins coming up, it's likely that they tripled down their position. That would suggest that they're longs underwater trying to GTFO out of this thing. That means that the next rally up, I would expect to see a lot of resistance, right? So that's kind of the mentality that I'm looking at here, especially if the POC doesn't change. If the POC doesn't change, then this becomes a massive brick wall. It's still pretty far up there, but these are things to consider at least. We've got some nice movement to the downside and a very logical place to find resistance, psychological place of resistance, structural place of resistance. It's got everything. 1.2. If the market ever moves at some point. Over on Bitcoin, mostly sideways after the bounce off the lows. Nice confirmed V-bottom. This is what you want to see from a V-bottom. We've got the move to the downside, and they reversed off the lows. Hey, this is what we were talking about. So with this drive to the downside, now we've got some confirmation. A little bit of a concern that these breakouts above the highs, or I don't even really want to call them breakouts. These things suck. They need some juice. These are not very optimal moves above the highs, and they're not getting a whole lot done. That's a concern. The one beautiful thing about this is if we move this a bit over, let me change this to orange, we've got these multiple tops, but increasing higher lows. We're getting that pent-up, coiled-up spring. Very nice continuation. That first breakdown, likely a trap. Buyers will buy into that and shove the market through the highs, and then we've got ourselves a continuation flag to the upside, further confirming the bull conviction, which, you know, from the bigger picture is definitely what we need. This is a reversal in the short term, though, and it's looking pretty good. On Ethereum, same deal. Ethereum looks significantly better even. We've got some really, really nice rallying to the upside. I don't even think they made it through an L3, did they? Oh, man, that was close, huh? They made it almost back to the L4, but couldn't quite tag it down there. Right, right there. Just missed it. So that is an L3, and usually the continuation off an L3 is going to be an L1. Took them forever to get an L1. Jeez. They finally got it right there. Continued back up into a new high. Buyers bought the L1 again. Another break above the highs. Buyers are going to be looking to buy the next continuation phase. It feels awkward because it's really high up here, but continuation phases for Ethereum would be off 2031s. Secondary phases would be off the triple up L2, which is a bit deeper, around the 75s, 1975s, that is. Got some potential here. Keep our eyes out. All right, 6 minutes until the open, right around the corner here. As far as the daily chart is concerned, they were able to get the 3 bear bars. Big, huge, massive problem. What is the big thing that needs to happen after those 3 bars trigger? They have to break underneath it. They didn't. Uh-oh. Maybe this is just a correction. The bulls start seeing that. Continuation back to the upside. And now, all of a sudden, we're back to all-time highs. Right? I mean, it's a value pullback. It was a little bit deeper, but as far as a value pullback goes, 3.6%, 2.3, 1.7, 2.2. I mean, if you double the 1.7, you're hovering right around that 3.67. You could call it a micro double value pullback. It qualifies, right? It works. It's not optimal, but it definitely works. Now, that does mean that if this is a continuation phase to the upside, we have to really pay attention to what they do at the highs. We know that when they hit all-time highs, the candle that forms up there is very, very telling in what to expect. So today is going to be a big day. We've got 3 incredibly strong bull bars back to back to back, after 3 very strong bear bars back to back to back that failed to continue. Shorts who sold too early, not waiting for the trigger, got absolutely just destroyed on the way back up. And here we are back up in the 15Ks. Still looks like a giant portion of a wave 3. We've got a little bit further inside look here in terms of what's going on in the 60-minute chart. We were trying to catalog that corrective phase. We can see that the sellers, and the assumption is the sellers were trapped or the longs are long. Either way, doesn't really matter. We had that flip-flop. Let's see if the POC has changed. It really didn't. It bumped a little bit, but basically the same price. So as far as that continuation to the upside goes, I mean, this seems like we had a lot of traders with increasing volume into the lows that would tell us that it's buying, right? It's probably sellers taking profit, but it's buying pressure nonetheless. And then we start rallying back up. But what are we seeing? We're seeing diminishing volume still. So realistically, we're still in distribution phase. We haven't done enough work to shift the POC up, although it looks like they really tried there. 15,000's testing. We haven't hit it in the US session. That's going to be a bit weird. All things considered, if it is going to pull back, 14.7, 73, 75 might be a final last-ditch effort. And if it just goes screaming to the downside this morning, what better spot to have a V-bottom form? I mean, it's perfect. Structurally, at least. Is it me or the volume on the ES lower than usual? Everyone busy watching the Olympic Japan Open ceremony? I mean, maybe. If we're looking at the volume, where is it here? ES is resting at 133 volume. The micro Nasdaq's already surpassed it at 141. Yeah, it's a bit low, but I mean, we're in the heart of summer. Towards, you know what I mean. So, a lot of people are showing up a little bit late to the party, showing up a couple minutes right before the open, do the analysis the night before and hope that it sticks for the day. What was the perfect level for the V bottom? Are you talking on the NASDAQ? The perfect level for the NASDAQ, if we were to look at the 1.73 times 2, 3.46 would be a double value pullback at the minimum. What the heck? Hang on. Price. Ooh, that thing jumps quick. I can't get it any closer in 3.44. The double value pullback of the lowest, 1.73 times 2, 3.46. On the larger perspective, 2.26 times 2 would be 4.52. So it gives a corrective zone from here down to 4.52. Oh, it's going to be tough. Oh, okay, good enough. Right around there. That's the double value pullback corrective phase. And that's exactly where the V-bottom stopped. So. That's pretty ridiculous. I can't believe they stopped that thing dead in its tracks. Stopped at the absolute low, 14,850 half. And then just scream the other way. It did technically start off, though, with an L4. As crazy as that is. Got a little under 30 seconds until the open. What tick chart would you use for the MES and MNQ? The MNQ, I think he'd still be all right with a 500 tick. It'd be all right. They're a little bit faster, you know, maybe a 512 or even bump it to like a 600, 700s. But I think 500s are fine. They're just a little bit faster, if that's your preference. If it's not, then definitely slow it down, maybe 750. For the MES, there's a lot more volume in it, you know. I think 1,000 tick for the MES, personally. It's... there's a lot of volume on the MES, but all of the trades are usually one contract, right? It's the entry point where a lot of traders who are brand new accounts, fresh accounts, new traders, etc. That's their starting point. Everybody starts on the S&P, you know, basically. And where are they going to start now? The MES. So there's a lot of trades that take place, but not of much volume. So from a tick perspective, on the S&P, it would make more sense to see like 1,000 tick. Stock exchange open so far. There's not been much going on. Remember, the big Jumbotron level this morning is going to be 15,000. I don't want it to be that color. Let's do 10. 15K. Now, remember, we have not hit 15,000 in the U.S. session. We hit it in the overnight, but we haven't hit it in the U.S. session. That's going to make a lot of traders upset. Like, wait, what? Who had all the fun? Guess. The Euro session, of course. What other session would it be? From this sideways structure that we've got going on, zooming out a bit further, we can see that this has been going on for a while. So obviously we're going to have to gain perspective from like a 15-minute chart, which is where we're at. We have a very sharp, decisive wave 2. Maybe this is wave 3 into wave 4. Possible. It fits. And this being that final desperation rally to the upside like we were talking about, it makes a lot of sense. And where did it turn around? 1.31. Usually you're looking for 3.8, those fib numbers. Didn't quite make it, so what? Close enough. The fact that they are hitting off of this area on this final desperation run, there are a few qualifiers that you can use as far as Elliott Wave while we're going into the open that can kind of tell us, should we be concerned up here? And usually, we should see some drastic selling pressure on wave 1 into wave 2. That's not the case. So we don't really have that unless we scoot this a little bit further forward off of the secondary higher low. And even then, they don't have it until the impulse. And even then, they still don't have it. So there are a couple problems here that are suggesting, you know, this could still be all part of wave 3 and 15,000 might not be the final stop. It's just deeper pullbacks. Sellers still under the moving averages. We are breaking down to a new low, although this is the area where a lot of swing traders will start trying to buy the dip. My concern, obviously, is buying that dip. I don't want that dip to turn into a reversal. I want to wait for a bit of extra proof. The continuation to the downside had an L3. Usually after an L3 with a decisive breakout, it's an L1. They just missed it. Close enough. They may follow up with one that actually tests it. That might be right here. To the tick. You would be shorting a very strong bull rally that it hasn't hit a massive psychological level in a U.S. session. It doesn't mean it can't fade away and this end up being the top, but I mean, there are some definite considerations if I'm looking to go short here. I might want to see, how do I hedge myself? So far, the first 5-minute POC on the S&P, looking good for the bulls, although we have a minute left, 43.78, still developing. As far as the NASDAQ is concerned, looking a bit better for the bears. Ugh, it's 64. Got a little bit of a mishmash going on here. Oh, okay, never mind. That helped. 53.50. Where do they get it? 30 seconds left. We'll see where the POC wants to shift. Remember, this 53.50 isn't confirmed. Don't put any weight in it yet. They do hold that subsequent L1, which means that we've got 2 of them now to the downside. Sellers will be looking for that third one. If it wants to go a little bit further, then we've got the L2. I still have some issues wanting to be wanting to be a seller here too aggressively. But if we're looking at the volume from the top to the downside, a few considerations. ABCD phase. So far it's made it 0.95. I mean, it's almost a perfect ABCD. So notice where the 5-minute S&P closed. It's above its POC at 43.78. The assumption is that the bulls are trying to take it higher. On the NASDAQ, it closes underneath it. The POC finally finishes off at 53. So the NASDAQ seems like I don't really want to be the first one of the party on the long side, but it feels exhausted. So build-in traders will be looking for this dip as a zone of interest to come back to something else. That something else is likely going to come from the impulse to the upside. Let's look at that. 1650. Until we get down into that area, sellers are probably going to keep selling it. It feels like we're hunting. Wider continuation would be looking for the one, of course, the 1618, which guess where it lands? 916.50. Don't believe in coincidences. Now, it doesn't mean they're going to make it down there to 1650, but that means that that's the optimal zone of interest. Give me 2 seconds here. All right, there we go. Sorry about that. Nice continuation to the upside. As far as this leg down, I still think this is an ABCD corrective phase. It's trying to extend down to a larger objective, just given the context. So far it's been able to reach out to a 1.21. We've got those repetitive numbers. That's not the first time we've seen the 2.1. Getting a little bit closer to the action here. From the bottom up. POC back at 42.75. Developing POC at 42.75. S&P beginning to transition underneath that first 5-minute POC, although it hasn't changed. Looking at the NASDAQ, the first 5-minute POC there also has not changed. There we go. Let's get a bit closer to the action here, see what they want to do. POC shifting to the upside, 51.75. Still pretty early. Sellers attempting to cycle underneath that 51.75. Very nice bear bar to the downside. I will be looking for a continuation play. Yep. Nice quick little snap to the downside. Again, I'm going short in a market that I'm anticipating is already completed an ABCD phase. I'm not looking to stay in short for very long. And look at the POC shift down. A lot of traders might have been thinking the same thing. Now we're through it, though. 14,948 POC shifting down the developing side. Scalpers have a nice move to the downside. Sellers who are looking for a bit more continuation. We've got some pretty nice bear bars back to back to stack this thing. Remember, it's a developing POC. There again, now moving down, 42.75. Still suggesting sellers taking profit while the market's moving lower. This POC is drifting down with it. popping back up again, 945. That might have been sellers who were trailing their stops. Notice that POC is directly above the last 500 tick candles high. Very strong bull bar. Sellers didn't like that at all. POC shifting back up. I love this for a potential continuation, although it's early. A lot of sellers may be looking to push this back down from the 948s. That's the type of momentum that I like seeing. POC shifting down again. Nice new low for a quick little entry there again. As far as the continuation phase to the upside goes, I barely take an actual risk, so makes more sense to look for the wider half to one. Which it's not there yet. Bulls maintaining pressure above the 43 quarters, although a lot of sellers know that buyers are trying to buy the low. It would make sense to see a trap underneath the low of day as well. A strong bear bar back underneath the developing POC would be a reason for a lot of these traders to potentially jump ship, and I'm going to use that as an exit. I don't like that at all. That completely disqualifies my reason for being long. I'll just accept the loss. More continuation to the downside is likely. Again, I'm not anticipating them going very far, but the problem is it's a relatively open door down to the 1650s, and that's where the challenge comes in. So with this developing POC, another pop back above, a quick little snapback. I'll re-enter. I like this, but I'm not going to float too much into it because I just exited for the last failure. It's got to really show up to the party this time. And by really show up to the party, I mean at least 2 to 1. And that's looking for a continuation back up. Now, preferably, I would like to get my average down maybe a bit further to get the targets back inside the first 5. POC shifting down in the 5-minute as well. Very nice bull bar continuation. We'll see what they want to get going here. We haven't hit the objective yet. .48 POC shifting again. And pulling back down with a fairly nice bear bar. And more continuation down. So that could be the attempt for sellers to try to shove back down through the lows. I've already positioned light anyway. But as far as the new low, the objective for that is going to be quite a bit further down, which is why I want to keep that risk on the lighter side. If we can rotate up and grab the 2 to 1, then so be it. Otherwise, we're still just kind of range bound at the moment. Big POC shift there. Jeez. More continuation to the upside. Break on through to the other side. We got to go through the highs here. At least where the average is. POC shifting again. Can see kind of the interplay that's going on. Now, as far as what we would expect, and the consideration that I'm looking at here is that on this impulse move to the downside, if this is going to stay underneath the lows of 66, we do have this as a nice clean wave 2. Wave 4 then is usually choppy, and this is. First 5-minute POC up at the 14,953s, and the developing POC is also resting there. Oh, man, what a gross-looking candle that's forming right now, huh? Whippy whippy. POC pushing to the upside here right ahead of that 5-minute. I'm going to jump out at that 5-minute shift on the POC. I've only got the one, unfortunately. But that covers for the earlier entry loss on 2 contracts with just 1. So the beauty of 2-to-1s, right? It just made it to a 2-to-1 actual risk, and it looked like it was having some difficulty there. If I had multiples, obviously, then you've got some continuation objectives. But from the swing perspective, we still don't have that proof. This could just simply be an ABCD phase in a wider 5-wave move. And it makes sense. One more leg to the downside fits, and where would it go? 1650. Now, if we do have a bit more continuation to the upside and invalidate that from happening at 66.25, different story. Short-term POC and long-term POC. Long-term POC is at 953. Short-term is back at 948. Zone of interest that they're going to have to do a bit of work on. They are invalidating it and pushing into a VVP in the 66s to 72s. And that basically tells the shorts there's something wrong. Right? I mean, we already kind of know something's wrong, but as far as the bigger perspective is concerned, look where we are now, right? That POC at 53, it did look like it was in a really bad spot, but one candle makes all the difference. Taking the assumption for a second that these are longs who have significantly more zeros in their bank account than myself, JP Morgan, Goldman Sachs, etc., all of that crowd, they have their scalpers objectives where they can start lightening the load a little bit on their large build-ins. On this dip down, that's already succeeded. Next objectives then would be a 1-to-1, which I don't really watch, or a 2-to-1. And notice where the 2-to-1 is, it lines up right inside the high. So, it's logical. Market continuing back to the upside. S&P is not above their POC at 43.78. They're kind of lagging behind a little bit. Still holding very good conviction to the upside. We're getting pretty close to a 1.61 up here. If they start breaking above that, then, you know, 200s, 221s, all that fun stuff. But we're right on top of a zone of resistance here, and settlement's not too far away for the completion of the wave 3, which means that there's still more continuation potential. It's just settlement and buying way the heck up here is a bit troublesome. This does invalidate that downward leg being an impulse move lower, which means that this was in fact an ABCD correction that confirms the suspicions that we had already. Not much of a surprise. We were already buying down there. But with this reversal back to the upside, it really aids in that conviction. Looking from the bounce point that they reversed off of, we've got an L5. Typically, I mean, an L5, that's a deep correction. L5s, you're usually going to see something a bit deeper, but, you know, sometimes they'll hit an L1. Maybe an L2 is a bit more likely. POC shifting to the upside in the bigger picture, 14,980. That POC was to the downside, which may suggest that traders who were buying into the dip, remember where they were before. They were here, then they were here, then they were here, then here, and then here finally. Now we're back up. This is right around a break-even plus scalp. And the fact that it went screaming all the way up to this point, if we start seeing some heavy volume rejection here, we could have a V top that goes all the way back down. But if it doesn't, and we start seeing this top weight, all the shorts who are trying to get this to go lower and failed miserably, the POC shifted up again. They're trying. If we see them fail, wave 5's right around the corner. PMI news comes and goes. Yeah, as expected, 945. It didn't really do much. I mean, it had a little bit of a continuation to the upside, but not much. You saw it jostle it around a little bit. All it was, and this is the thing that I love about news. That news, you'll notice when it happened, if you watch the recording back, you'll see it would really fast, up, down, up, down. Notice in hindsight, all it was, and this is what I love about technicals, in hindsight, it was nothing more than just a bunch of algos getting out of break even. Like, wait, nope. But the thing is, they can do it on a scale that's nanoseconds. Yeah, I can't. So, I can't do it on news like they can, unfortunately. It's just funny to see that the end result was nothing more than just a boatload of break-evens. Market pulling back a little bit now that we're hovering around the settlement price, 14,976.75. As far as a continuation to the upside, it makes sense, but in L2, I would prefer, really prefer an L2 here, not the L1. We're back to the L1, and you know, maybe they take it, but let's see what they're able to do here. We do have the POC, which shifted back at 14,976.75, and honestly, we haven't really had a very valid attempt from the sellers, aside from this nice ABCD down. A lot of shorts are probably stuck down here, like we've been talking about. They're looking for an escape plan. Right now, remember where we are. They're still holding the L1s. I just prefer the L2. As far as the S&P goes, the POC of this overall morning cluster hasn't really changed a whole lot, but it did move down a tick. I guess it's got that going for it. 78, now it's 77.75. POC continuing to stick at around the 76.75s. The short-term move from the bottom to top, still down at the 948s. Really quick snap pullback down into the moving average. Not quite tapping the L2. Which means from an algorithmic standpoint, it is still unfinished business. Although, psychologically, a lot of traders probably bought into that. Given that, in the short term at least, let's take a look at what's going on. We're stuck right around that 5-minute POC, which is a bit of a bummer. Trying to break back above it. More continuation. Hasn't made a new high, but again, is likely to. Notice what this was, right? We've got wave 2. If this is an impulse leg, which it is confirmed to be. Wave 2 was really sloppy, choppy, not to the point. Wave 4, nice and quick. It just didn't quite dip far enough. Oh well. From the 15-minute perspective, we have gone up to the 3-1. I mean, again, we don't have any POC changes or anything like that, but we haven't hit 15,000 in the US session. It's right there. So close. Also, we still do not have a physical test of the L2. Technically, we just have a bunch of L1 continuations so far, even though it came very close to the L2. Couldn't quite get the job done. Man, I cannot see that line to save my freaking life. Oh, yeah, because the OP... that's probably why. Let's make it a little bit darker, huh? There we go. 10 o'clock right around the corner here in about 5 minutes. Zone of interest is going to be a physical test of the L2 if they can actually get the job done. Although the short-term POC still developing, all things considered. Resting at the 14,948s. We still haven't gotten that 15,000 test in the US session. feel free to get those questions in if you have them. And then we'll get those answered for you as we start getting in closer to 10 o'clock. Market's still just kind of hovering around. Not really doing a whole lot of anything. Trying to get a little bit more of a continuation to the upside. What is the new... yeah, so in the VIP section, you'll notice there's a new button when you go into the VIP zone. I talked about it in the Discord chat as well. There is a new VIP exclusive drop coming around the corner that goes over... well, I'm not going to... Hey, well, you almost got me to spoil the beans. Hey, now. Hey, wait a minute. Nope. Oh, close. You almost got me. Goes over some cool stuff. Don't worry about it till it's done. It's the VIP private reserve. It's going to be something of... I think a lot of you guys are really, really going to find interesting. And then for the Academy members as well, I'm not leaving you guys out. Unit 4 is right around the corner too. You'll notice a new button inside the Academy too. POC shifting back up. Market with a quick dip to the downside. Quick little dive down, trying to get the physical test of the L2. How would you trade the long-term corrective phase, or would you steer clear? The long-term, in terms of what time frame? When you say long-term, could you clarify for me real quick? Market is rebounding aggressive volume here to the short side at 76.50. If this is going to end up being a complex ABCD that turns into a 5-wave complex pattern, although, you know, technically speaking, it has satisfied all of that movement, it would make sense that we probably go range-bound here with a corrective phase. That corrective phase, we could be in it right now with this higher low. It doesn't have to make a lower low. Shifting back again. Now, that's a strong bear bar off of that POC. So this is either a very decisive trap to get sellers to sell into L2 for bulls to reload, or this is the start of a potential leg back to the downside to retest that earlier volume in the 45s, 50s. They still haven't gotten the physical test of L2. Another just nick it and run. I got bottom bid too. No fill. Let's go daily. Okay. Yeah, let's get out of this area first, and then let's take a look at the daily. And I was also thinking too, on Fridays, it might be kind of nice just to maintain the morning session, because usually Fridays are the days with the most volatility. So then again, that also opens up the door for a lot of prospects for scalping too. I don't know, I'm not going to change things all of a sudden. We'll still roll to the extended session, but nice little L2 dip. They finally got that test. 14,975 POC is shifting very quickly. Market pushing through. That's a very strong sign. Right up into the... Whoa. I accidentally went short. Woo-hoo, exit that real fast. Whoa, wait a minute. I sold one too many. I did not mean to go short there. Hit the button one too many times. Beautiful continuation back to the upside. I was only able to grab the one. I tried grabbing it multiple times. I couldn't get filled on the stupid thing. But a good continuation to the upside for a nice L2 bounce. Finally got it. Further continuation up if traders are looking for that zone. A little bit further would be like a 3-to-1. I don't know if that fits. Yeah, 3-to-1 does still fit in the highs. POC shifting at the 975s. Bulls might be giving it a reload here. That's a really nice breakaway move. we're likely still in the corrective phase, right? So the fact that we've had a new low, thank you, alarm clock, a new low might just be the start of an ABCD to the downside. We can't lose sight of that. This is an ABCD corrective phase. This is only leg one of ABCD, or the ABC, however you want to look at it. So with 10 o'clock out of the way, and with us being directly on top of the POC and 15,000 around here, and the buyer's not able to really carry through for much of a 2-to-1, let me take care of the your question on how would I trade a long-term corrective phase, and then we'll also take a look at the results for the week to make sure that the trader's math is solid, and then we'll wrap it up. Looking like longs still have a shot to get 15K, but it's starting to get messy in here, and I don't know that I want to mess around with it going into an ABCD correction phase. Ugh. Unless I can get another new low, like a 3-press wedge or something, maybe. Now, looking at the larger perspective, and I'm going to zoom out to trading view for this, because, well, you know, it is what it is. The NQ on a larger corrective phase. First off, the one thing that I really need to see here is where are we in the grand scheme of things? This is an incredibly strong rally to the upside. And there's not really a viable, like, wave one to this. I mean, yeah, sure, I guess this little bitty thing down here, but that's it. And this is wave 3, and it makes sense is the problem, right? Because wave 2 was really fast. It barely spent any time there. That would make sense then that wave 4 is an absolute train wreck, and it was. So it fits the bill, you know? And if we're looking at the continuation to the upside, it would have been a completionary move for wave 5 here, where we started seeing a dip back. If that's the case, typical ABCD correction back down, A to B equals C to D, right? We had it. We start rotating back to the upside. Now, the thing that makes me think that we might either still be in the phase of wave 5 or a really weird looking continuation kind of corrective phase, which doesn't make as much sense, is because if this were another impulse to the upside after this ABC, which it should be, this should then realistically be like this. But, well, wait a minute. That doesn't qualify. That broke. It broke inside that low. So this is still part of a complex correction phase, which would make more sense to look like this. Got 1, 2, 3. Oops. It helps if I use the right frickin' one. We've got the corrective phase, which is still just rolling to the upside. We're you know, maybe in the middle of it, maybe not. We'll kind of have to wait and see. So, I mean, from the bigger picture, I think we're really, really over the top high. I don't want to be a buyer up here. So then where would the correction phase be? The correction phase would be off of previous value. The last value pullback was 8.16%. And remember, this is a daily chart now. The pullback before that was 12.2%. The pullback before that was 15%. And the pullback, yeah, we did have some smaller ones. Those are probably 4s. Oh, no, okay. Another 7 or 8% pullback. Okay, good to know. What's this pullback then? 7%, 6.95. Okay. So we are gaining some useful information here. As far as a heavy value pullback, well, I mean, that kind of stands out a ways down there. But for now, it seems like when the market's pulling back between... That's a really wide spectrum. I would say from 7 to 8% first would be the first category in terms of a nice pullback zone. So if we're going off of the top, we've got 6.95 would be the top of the zone to the bottom of the zone, assuming that it just dropped right now, right? So from 6.9, and then we'll go down to 8. 8 should be okay. This is my concern, right? This quote-unquote value pullback creates an incredibly tiny box. So as far as a zone of interest, it's a very small area and longs will take it. But really that's a bit of a mess, you know, because realistically, if we look back in hindsight, they just had an 8% pullback and it rallied back to the upside. It worked out nicely. If they fail here and we start diving a little bit lower, then we're looking at probably 12 to 15%. That would be the next logical zone of interest. So 12, and this is why I like this one a lot more. 12.25, yeah, whatever, around there. 12.25 to 15 and a quarter. Now, the reason I like this one so much more is because that puts us right back at that previous swing low where I know a ton of stops are. So as far as a value pullback is concerned, that's way more interesting, right? That's a lot more interesting than the one that's way up here. Like, yeah, it's at the previous swing high, whatever. Impulse leg at the end makes me a bit nervous. This might just be done. So seeing a much more valuable pullback down to the 12 to 15% would have me much more interested. If we start dipping down to that area, then, you know, pretty straightforward from there. You'd like to see it go down, higher low if you can get it, but you might just have a V bottom down there. It's a daily, so you can find an entry in a faster time frame, of course. But that would be the approach. And then after that, the next one's not until 30. So if they start breaking down through that, then we've got other problems, right? Then we're looking at a pullback all the way down to, what was it? Historically, the longer term pullbacks averaged around 32%, and that would put us back at 10K. I talk about it like it's Bitcoin, but I mean, really. So they've got some valuable zones along the way. And they'll likely play ball in there. Just, I'm not expecting a bounce in the 6 to 8% zone to be all the way back to the highs. It could be. But I would look at it in 3 different zones like that. And really 4 if you double the 32%. You really want to see this thing absolutely collapse and the economy fall apart for a little while. Then you've got those 70s, 80s. Those are fun. That's how I would approach it. All right. Well, it's already 10:07, and we've already kind of gone into training time for beyond that. So I'm just going to keep going with the extended session, or just NYSE extended session for the Friday, and we'll just kind of treat it as a bonus for everyone. We'll see if we can get something of interest going on here, and just keep the morning room going. It doesn't make sense to transition over now when it's probably going to get slow and die in the next 15 minutes anyway. It's a waste of time to switch over, and I'm not going to put you guys through it either. So we'll just keep it rolling. Give me 1 second, though, and I'm going to grab a drink, and we'll switch over into the extra time, overtime. Quick little dive back down into that POC for a nice retest. If sellers are looking for their reason to get out, if this is a rolling corrective phase to the upside. That 975 bounce is pretty telling. The problem is we know that this is likely a corrective phase. So, mind sharing what your thoughts are on the S&P. Are you, Steven, are you talking the long-term chart as well, like on the daily? A lot of volume coming back at 75 again. I want to see what they do here, but I don't really believe them. This feels more likely to come back down to the lows of this megaphone that's trying to form. Ooh, POC shifted down right there. No, as in now. Gotcha. As far as the movement that we've got going on so far, the POC has not lifted off of 43.78. And now the market's beginning to transition above it after the sellers have made a valid attempt twice. I have to assume that the buyers are trying to take over on the S&P. Now, we've only closed once above that POC, right? So it'd be nice to have a bit more proof. but, you know, maybe get back above it. Maybe make a new high, something along those lines. But, you know, all things considered, where we are now feels like we're kind of on a more of a flag type pullback. And we're at the top of it. So it doesn't make sense to be long up here. I would rather look to buy a higher low, L4, L5 style down here, inside swings, stuff like that. Low probability, but the reward's really nice. At least that would let the corrective phasing get out of the way. But we can see buyers are stacking up at the 378s, are defending it. It hasn't even been able to get through it yet. Look at them. They're just sitting on it. $14,975, still the POC on the NASDAQ and hovering. As far as the POC on the bigger picture, if we continue this further forward, $14,975, looking at the way that this looks. Remember how it formed. We started off with a POC that was a little bit further, 5-minute POC right here, continuation to the downside. So I'm curious, did they hit a scalper's objective? Right? Was that job done? It was not. That's a big problem. So we know that a lot of shorts are in a real problem in a real big way. That's a great indication where if we can get a flush back to that 5-minute POC at 14,953, and it's going to feel super bearish, and that might be the purpose. That's a great spot for buyers to potentially start eating into longer term. And I say longer term, I mean like today. It's Friday after all. Swings back to the upside. Now, the caveat here, remember, it's Friday after all. If the market is going to have a huge losing day or a giant pullback day, it's usually on a Friday. Some considerations to be had here. So I think the tug of war that we're seeing right now, that we're seeing very obviously, Stephen, because I think you're right, is the sellers are stuck and the buyers know they're stuck and they're trying to stop it from falling down. Because if they can prevent it from dropping and letting those sellers out, then they've got themselves a squeeze. And we've got one heck of a leg all the way up to 15K. This bull bar continuation, I like this pop higher for a rally to the upside. It's a later entry though, so I've got to take the assumption that I'm probably going to be on the lower side of things, which means it's likely going to be up in the 85 quarters or so for now. Exactly. Yeah, Adam. Yep. The other way can be definitely true. Mondays and Fridays can also be the best days. So You know, I don't mind Fridays, but you just, you know, those days, you just have to understand what you're walking into, you know? It's, you're walking into a dry field with a flamethrower. You just got to be careful. I didn't get filled? Are you serious? Thank you. Jeez. Scalper's objective taken out. Again, the only reason I'm taking it with a Scalper's objective is because of how late the entry was. There's nothing I can do about that. The POC was back at 975, and they just didn't give me a chance to add any more than the 1. So I've got to do what the market lets me do, you know? As far as the sequence is concerned, we did have a picture-perfect pattern follow-through. We've got the L5, usually looking for the L2. They missed it. They finally got the L2, worked out beautifully back to a new high. The next pullback here is another L2. We've got 2 of them now. So we've got an L1 and 2 L2s. That's not really a pattern, but something to consider at least. Good continuation back to the upside. If longs are looking for an area to take profit, back to the top of this megaphone is a fantastic location, depending on how many contracts you're able to get. And look where we are, 14,997, Walmart special garbage. Here we come. Every time, man, every time. Even the first time around, didn't it stop at like 96 or something like that? It's already hit 15,000. Come on, NASDAQ. It's not too hard to do it in the US session. Still hasn't done it. Oh. Okay. Was that last juke to shake everyone out of their positions? That was a beautiful, quick little washout if it was. Likely going to be jobs done up to 15K, but if they rally through 15, a lot of times they're able to get a good 10, 15, even 20 points sometimes through it if they can jump. 98. Oh. Yay! Job done. Woohoo! 15,000. They finally got it in the US session. 15,000 in 1 quarter. More continuation, more continuation. Again, we are going into the 1020s. How many trades we're going to get for the rest of the time, I'm not 100% sure. So let's look at the numbers for the week and see kind of where the traders math is at, just for those, because I know some folks are going to have to jump ship soon here. Dollars and cents aside, if we're looking at the probabilities and the probabilities only, that's what really matters here as far as traders math is concerned. So let's look at this week's numbers. We had 69 total trades. As far as 69 trades go, 73.91 were the winning side, minus the losing side was 26.09. The average loser was 22, and the average winner, 73.91, was 29. So as far as the traders math is concerned, to say the traders math turned out pretty well this week would be an understatement. The traders math was very good this week. Normally we're floating, you know, I'm usually floating in the 800s, 900s, right? So in the 1500s, that's a pretty solid week. That also tells us that as far as our trade plans are concerned, we were trading it appropriately. Very, very solid. So what's next? 20K? I mean, you know, we kind of would have laughed about that beforehand, you know, but I mean, let's be real here. Yeah, kind of. It feels like we're kind of in the territory of what Bitcoin, let me clear all this crap off. What Bitcoin looks like. We're going to have to go out to the QQQ, and I still don't think I can get enough data. Let's go to a weekly. Yeah, jeez. I mean, this looks like Bitcoin in the initial rally up, doesn't it? Had the initial crash, lots of nice little pumps inside there. Higher low, huge continuation to the upside, just out of curiosity, because, you know, let's switch that to logarithmic so I can actually see what the crap's going on. If we're... what? hang on a second. Hang on a second. I know what's going on. Gotta turn them all back on again. Okay, there we go. So as far as the continuation is concerned to the upside, we have this massive L5. Now, after an L5, what do we usually expect? An L5 usually procures an L2. Well, if we look at this along the way, we had the first pullback, which was an L1. The first pullback was an L1. The first pullback was an L1. The next major pullback almost made it. Right there. Almost made it. Right there. So this dip that happened here, this was, just for reference, 2015. So that dip that happened in 2015 might have just been an attempt to grab an L2, but it hasn't physically, actually tested yet. So if we're going along the way, when do we finally get the L2? There it is. That was the dip in 2020. COVID. It's funny how news operates around technicals, isn't it? They finally got the physical test of the L2. And what do? They slingshot that sucker straight to the stratosphere. Job done. So with that completion and that move to the upside, now we have to ask ourselves, well, what's next? Right? What's the next completion now that we finally, and this is a weekly cycle that started back in 2002. Okay? This isn't a small cycle by any means. What does this look like? To me, at least, this looks like wave 1, wave 2, wave 3. Uh-oh. Wave 2 was very nice, very decisive, aggressive, straight to the point. What does that mean for wave 4? This is a weekly chart. Likely, we're probably in, once it starts doing it, it hasn't started doing it yet, but once it starts doing it, we're likely either in for an incredibly long-term lasting sideways range, potentially going backward, usually twice the size or 1.5 times the distance of wave 2. Well, if we use that as a measurement and we look at that distance and put that on up here, let's just say it happened right this second, right? That could project a corrective phase lasting all the way until 2024. Now, that corrective phase is likely very wide, like we see over here. And because it's likely going to be messy, it's going to be a really wide sideways range. So guess what? I'm really freaking excited about this. That's awesome. That is fantastic. Because we're likely going to be going into a sideways range. Yeah, okay, boohoo, whatever. But a very high volatility sideways range is what this is likely going to end up being, which is fantastic. Right? I'm so freaking pumped for that. So yeah, that's awesome. Hunky dory. That's great. We're seeing our portfolios go straight up to the moon and, exiting along the way. But when this corrective phase comes in, it's likely going to be aggressive. It's likely going to be very nasty, and it's probably going to stick for a while. It's usually the way that it goes. Now, the nice thing is, if that is the case, wave 5, the final wave after all of that sideways BS over in 2023-24 is done, wave 5, at least on the indices, is usually led by hope. So the rally to the upside typically tends to be relatively aggressive towards that top. So hopefully once they finally do break the highs, they might be able to start a new trend. If they don't, then that's a whole nother bag. But we're talking like 5 years from now. So we've got a lot of things to happen between then and now. Yeah, it's been a long road since the bottom. You remember back when it was crossing in the 10,000s and everybody was celebrating and like, yoo, woo, yay. Like people selling hats on the street. They did the same thing for the Dow and they were hitting their major levels as well. You know, I mean, those are big milestones. And the fact that we're hitting 15K now, it took a long time, but, you know, it makes sense that this is a wave 3 just grinding its way up. I'm super pumped for wave 4. POC so far from the sideways perspective, we know that the sellers are trapped, and more importantly, now we've broken a new high. So if they are trapped, we can really kind of reliably assume that they are in negative territory. If we see the POC shift to the upside, these sellers are likely building to the upside, and we're talking about the first 5-minute POC sellers from the beginning. If these are longs to the upside, likely we've seen them take at least some profit off at the 14,975s, never closed underneath it. So as far as support goes, in hindsight at least, one of the most cleanest levels of support I think I've ever seen. And then a continuation back to the upside again. This next rally up, though, it would make sense for that deeper pullback. Doesn't mean it has to happen, though. Yeah, the tug of war is still going strong. I haven't really even seen a reason to trade a whole lot on the S&P. The distances are just so small. Like, if I'm going for a scalp, 77 to 76. I mean, look how big this box is. This is 1 point. And I've got to have the market move 6 ticks from my entry to my fill. Look how much this thing has to move. It's like 33% of the range so far. It's not even worth scalping this. Not unless you're trying to buy the dip and hoping that you're right. And, you know, if you're building in, that works for sure. If you're fading, you're in heaven right now. But if you're trying to buy above candles, good luck. Jeez. They finally got the 15,000 test, made a high of 475 and started to fail back down again. If we increase the volume back to the highs, still potentially developing, but if we're going along the mindset here, pretty clean and clear and under control. We've got that first wave 1 into wave 2, nice and easy. Wave 3, all the way up. Now wave 4 is anticipated to be a mess. I don't consider this to be that messy. That didn't really go very long. To me, I think this whole thing could potentially just be part of the corrective phase, but the definitive high didn't take place until technically the low is there, so technically here. Then the continuation up would be there, maybe here, 0.74. That doesn't really line up, but we are hitting the 6/8. It fits, you know. So going into a corrective ABCD move back down, where 14,975, that would fit. Oh, for sure. The market can definitely prove us wrong sometimes. I mean, for me as an example, I was looking for the long side. And granted, I mean, we were still hitting 2 to 1s, but I wasn't expecting this to roll all the way back up then. Otherwise, I would have been trying to hold on a little bit longer. You know, I mean, I was expecting this to still chop around for a little bit. So I keep getting proven wrong on all these continuations. Oh, well, welcome to the life of a trader, right? Is this? All right, market just kind of juking, sidestepping, hanging out, not really doing a whole lot of anything. We're stuck around those 15,000s. If we're looking across the field here, just keeping an eye on what's going on, the ones that we had our eyeballs open for at least, we're not really doing anything around yet. We're still stuck. So as far as gold goes, I wanted to see them churn above the highs here, and well, they're not doing it yet. Ethereum, I wanted a little bit of a deeper pullback, but not much. Bulls still continuing to the upside. Yep. Retesting 15,000. Oy. It could be, but look at that bull bar. I mean, look at on the S&P, sorry. Let me tell you what I'm actually talking about. Look at that bull bar on the NASDAQ. Like, wow. Wow. Like that's a nice bar. If they're going to start a rally that has another 2-3 candles to the upside, that's the candle to do it. It's forcing traders to buy high, so it feels super awkward. What better spot to have a rally take place when nobody else is trying to buy it and people are trying to sell it, or nobody really wants to sell it yet because we're above 15,000. It's this really nice balance of a potential breakback above the highs. Because what's next? 1550 and then what? All-time highs. Like, we know how all-time highs work. If they close aggressively above all-time highs, we got another like week and a half of continuation. Who's going to want to sell in front of that? So, I mean, you could definitely, I mean, it's valid. Buyers could validate along above this bull bar. But the consideration has to be, what's the likelihood of success here? The likelihood of success that you're buying at the top and you get a continuation up to a target has to be terrible, right? I mean, at best, you're at, what, 40%? So you've got to go for a 2-to-1. It's the only way the trader's math makes sense. But they have a point. There is a reason to believe them. Noting the POC on the NASDAQ as well, the market continuing to the upside, meaning that these traders are still stuck. Let's take the assumption for a second that above this high, they took a 3-to-1 entry just to mitigate and try to balance down, right? So just above those highs, let's say 90, make math easy. Let's say 95. Okay. They triple down their position. So you've got one contract at 14,953. You've got 3 more at 995. Divide all of those by 4 after tripling up your position. 14,984.50 is the break even. 984.50. 984.50. Now, you tell me what you think happened there. See, this is the thing. You know, I mean, technicals and all this other stuff aside, this is like, once you see it, you can't not see it. It's like the sideways tile in the bathroom that they put in wrong, right? It's there forever. You can't not see it. It's so ridiculously obvious that there is a break even there. And that's why we were talking about potential longs to the upside. Because we know that sellers took a 3-to-1 and jumped ship. And we can see it in the candle. I mean, it's all there. Now, they could have gone in more than 3-to-1. I mean, it did go above it. But the general math, just going really easy math above the highs, entry point off the POC of the 5-minute, really common sense stuff. I don't believe in coincidences, and it's this kind of stuff that's why. So, I mean, the bulls, like I said, they have an argument. They have every reason to believe that there could be a really, really strong continuation up. Failure for that would take place below the bull bar that kind of is triggering this long in, but pure failure would take place underneath the low. That would be a total invalidation underneath 72.50 for longs. Just to show you the risk differences that traders will likely be willing to take on this. Why do you think sellers jump ship again? It depends on the perspective that you're looking at. In the short term, I think sellers jump ship because of that break-even response that happened. It was too perfect to not have been there, basically. And just so you can see what I'm talking about, it's this little wick right there. Now, what I'm looking at, remember when this POC actually showed up? This POC was originally down here, right? So sellers who tried shorting this were looking for a 0.5 to 1. And the entire reason why I'm looking for stuck shorts in the first place measured their entry point to a scalper's stop above the highs. They did not get filled. Scalpers are unsatisfied on their objectives, meaning that when it goes back up, they're likely going to try to sell. We know scalpers will let it come back once. That's fine. No big deal. But when that fails and goes back up, the quick ones are going to exit. And man, did they exit. But the ones who are hanging out, the build-in traders, the ones who are looking to hang on and really try to ride down a bigger move, they got absolutely dumpstered, right? So with this move to the upside, the assumption then is that given that they've been absolutely obliterated, they are looking for one very obvious thing to happen. It was a full flip. It failed on them. So traders are looking for an L1. Along with that, these sellers know that they are drastically wrong and they need to get out as quickly as possible. They were short down here. They couldn't get their target filled, and now they are massively underwater after seeing a POC shift up that still couldn't get the job done. So we know that they're stuck. This could be longs who are long from here as well and in profit, for sure, 100%. And if we look at that from the perspective, where would their stop have to be? Just common sense stuff underneath the lows. Where are we right now? We're at a scalper's target. I mean, regardless of which way you look at it, right, there's a lot of different reasons to believe why sellers are going to come in here. My reasoning is that sellers are stuck from down here looking to sell above the highs. I can validate my reasoning by further examining the way that the candles formed. And the candles formed in a way where if they added 3 to 1 of their position size, which is a very common GTFO strategy, you take 1, you times it by 3. They're short, let's just say 1. They short 3 more here. They're short a net of 4. That average was right there. So I have very easily validated my claim. That's all it comes down to. I know the shorts are out. At least the smart shorts who managed it with 3 to 1s and, you know, the management ones. The break-evens and the POC shifts and all of that, that hasn't happened yet. But the bulls have more than enough reason to believe that they can at least get a scalp to the upside, if not that larger swing, that bigger move. That's why I think the shorts are stuck. And why I can prove. Scientific method, hooray! Well, at least theorize. I guess there's no way to ever truly prove it, but the market in its pure chaos. This is the continuation that we were talking about on that bull bar. See? It makes it feel really weird. We're too late in the day for me to really want to put any risk on the table. I'd rather end the Friday on a very positive note. It's already been an incredible Friday, and I don't really want to put any risk on the table anymore. We're just doing training questions, but this is the reasoning why I still talk through these things, because there's a lot you can learn from what's going on in here based on the context. When you know the context, you can increase your likelihood, or your not your likelihood, I guess your likelihood too, but your mental fortitude of wanting to take a long where it would feel awkward. Right? That's your justification. Science. All science. Exactly. Where's the glitter? I got to pull it out of my pockets. Science. Bill Nye taught me right. I remember when that AV cart came out. Ooh, baby, it's going to be a good day. Bust out that VHS, science teacher. Let's go. I'm dating myself now. I'm not that old. Not that old. I'm not that old. Going into 10:40, let's do last call for questions. We'll start wrapping it up. It's been a fantastic week. Yeah, we can go more modern ones, right? Sheldon Cooper. I mean, to be fair, like Bill Nye's kind of come back into the fold, you know? So He's got his podcast thing going. He's got some stuff happening. He hasn't fallen out. Him and Neil deGrasse Tyson, they've got things happening. I didn't watch Neil deGrasse when I was in school, though. That would have been cool. And here we sit after this completionary leg to the upside. All right, here it sits. Another all-time new high. The extensions get yet more extended. Exactly, Steve. I like that. It just keeps going. It's like the Energizer Bunny, man. Just running through the highs. And they did it during the US session, almost as if they were proving a point. Like, there, see? We can do it too. You know? Like puffing up their chest a little bit. I mean, job done, you know, point proven. If we look at the overall move, it is continuing up to the upside. I mean, it's still going. All right. We're still just kind of hanging out at these highs. I mean, we can see what took place, right? Beautiful little dip back under structure, V-bottom reversal all the way back up. Just super awkward up here again. Here we are. Just out of curiosity, if the bulls did buy that like we were talking about, have they gotten the 2-to-1s yet? Not yet. They still got more work to do. Front runners even. Limit orders? Limit fills got it. Limit fill front runners got their fill on the 2-to-1. That's what that giant wick on the top was. Not to say that it's done, but just to show you the follow through. Low probability, but really nice reward. The beautiful thing about that setup, I know it feels awkward, but do the trader's math, right? This is the important part. I know I talk about this all the time, and there's a reason. It's very important. If you were to look at that as a 2-to-1 with a front run, obviously your probability is going to be bumped up. If you were just throwing darts at a board with a 2-to-1 math, you're at 33.33, right? Just common sense. Now, if we bump the context a little bit by limit filling, reducing our stop, looking at front run targets, you know, doing common sense things, obviously that is going to have a little bit of a hindrance out of the probability. But when you're looking at that bigger term objective to the upside being a 2-to-1 and front running it, you're offsetting that difference where you're looking at it closer to like a 36-37% likelihood. That still sounds like crap, right? 36-37%. Like, oh my God, why would you ever take that? Right? Well, let's look at it. 36 trades times twice as much, 200, right? The remainder, now 36 minus 100, 64 times 100. Negative 6,400 plus the positive winning trader's math is a positive 800. That's good trader's math. That's why I would take that. Now, I didn't, you know, time of day and I don't want to risk anything, but there is a valid reason to. I know 36-37% sounds terrible, but it doesn't matter. So, out of interest, how did you go about developing the levels you use, L1, L2, etc.? It was a personal developmental phase where I wanted to figure out a way that I could categorize the market in something that was purely mathematical. This was before I had really kind of stumbled back into Elliott Wave. Interestingly enough, a lot of them do line up, which goes to show you the market is the market is the market is the market. But regardless, the concept is utilizing math, without going into too much detail, obviously, that's all described in the Academy. But utilizing math, how can we categorize what these pullbacks are telling us? Is it a correction? Is it a continuation? And what's our next play? And based on that next play, can we utilize that as a higher probability likelihood of long-term success? Think pattern, right? So if they're giving me a repetitious pattern, mathematically speaking, over and over and over again, I know that I can rely on that. And we already know if I'm going for a 2-to-1, the math doesn't have to be very good. I could close my eyes and throw darts at a board, or just close my arts, and you'll be right around the same place, you know? So that's kind of the mentality, is a repetitious pattern where I could categorize what the market's doing in a way that made sense to me. If you've been around me for any extended period of time or even a short period of time, you know that the one thing that makes sense to me is math. Math doesn't lie, period. You can make it lie, right? Welcome to quantum physics and the science world, which is why I find it so fascinating. But as far as math is concerned, when dollars and cents are on the line, it doesn't lie. So it was a way that I was able to design certain ratios that were able to categorize different pullbacks and what that meant. They are totally custom, and I've never seen anybody else use them anywhere ever. That said, I'm sure someone has. Welcome to, being in one of 8 billion. So it's just a way that makes sense to me. Here's the thing, right? I know when you draw them up historically, it looks fantastic. And don't get me wrong, I love when we have new members, right? And all of that fun stuff. But don't get lost in it being in the one shoe fits all, solves every pattern. Because again, there's a lot of, the majority of trading actually is all psychological. I could give the same trading plan to 1 million different people and I would get 1 million different results. It comes down to the person that's inside of it, So as far as those areas are concerned, really what it comes down to is understanding how they operate and then kind of molding them. And that's why we do one-on-one calls and all of those that last sometimes over a year together, working with members directly with like really, really in-depth work. That's why, because it's constantly moving and it's molding it to the trader themselves so that they understand it, right? And there are going to be some people, like I said, don't let it be the golden bullet. I don't ever sell it that way. As far as sales perspectives are concerned, telling people that you're going to be right 37% of the time is probably not the best route to go. People don't like being wrong more often. It's difficult. That's a psychological battle, right? The other side of that is scalping, but you have to maintain a very high accuracy. And I don't lie about that side either. It's tough. Being a scalper is not easy. It's one of the hardest forms of trading that you can do. Because now you have to be accurate, right? You don't have a choice. As a VIP member, do you have a constant Zoom chat for the remainder of the day? Yeah, we have the Discord chat, which is open to basically every membership. But as far as a VIP member, we do have the Zoom stream, which is from start to finish. There's no delay because it's Zoom, of course. So it starts at 9 in the morning, and sometimes we will do pre-analysis. I haven't been doing so good on that lately because, sick kids and life happens. Where we'll start up, 10 minutes early, talk about the game plan, that kind of stuff. But more often than not, it starts at 9 and then just goes straight until the end. As an example, right now would be the time that the morning room would have closed back at 10 o'clock. The morning room traders, you normally wouldn't see this stuff. So. And as a member on YouTube, you see this stuff with a little bit of a delay, but then you've got to kind of skip around. There's, the nice thing about the VIP, aside from all of the other benefits, we talk about that every morning. I'm not going to beat that into the ground. Is that it's just constant. You don't have to worry about switching around. And the cool thing is it's on Zoom, so you can throw it on a tablet, keep it on the side so it's not on your computer. Of course, you could do that with YouTube too, but... Now, hey, I almost spilled the beans on what the update is for the VIPs earlier. It's not going to happen. I'm not telling you what it is. It's a surprise. It's the private reserve, all right? I do have updates coming out for the DTA as well. I put in just as a side note, I put in a new button in the VIP section that is kind of like a little bit of a teaser. It's my own fault. That says coming soon. And I've been getting a lot of questions on what's this button. It's coming soon. Don't worry about it. It's a surprise. 2-to-1 objectives on the S&P has been filled, whether they were front running or now if they were static. They might not have been guaranteed a fill though. That hasn't traded through that 86.75, only to the tech. All right, that's going to do it. I'm not seeing any other questions. As far as things are concerned, I mean, it's been a really, really solid week. I certainly can't complain. How can we automate your methodology? There is no way to automate the methodology. I mean, you could try, but a lot of the ways that we approach the market is based off of, I mean, obviously statistical. You could automate anything. You tell it to buy at certain price, sell at certain price, easy peasy. But as far as the overall way to automate it and why you can't is because the market cycles. And that's why so many traders fail when they try to follow specific patterns. Because they expect it to work every single time, but they don't understand that it's only going to work 36-37% of the time. With the mentality of a 36-37% accuracy, you can automate freaking anything. I mean, let's be real here. Throw darts at a board. 50-50 coin flip, fine. Go for a 2-to-1. Go for a 3-to-1. Yeah, I mean, without context, it's all a probabilities game. It's a little bit better than the casino, I guess, but you've got commissions. So because of the fact that we derive the majority of the profitability or the ability to have good trades from context, you can't automate that. That's something that just comes with time and screen time, which is, again, a terrible sales pitch. People hate hearing that. But it's the truth. It is what it is. You can try to automate things, but if you're going to be automating things and you're going to be utilizing automated strategies, you'd best have several automated strategies that you can filter through because they're going to go in and out of favor over and over and over again. If you want to trade price action and understand what's going on, you can't automate it. It's just not going to happen. You can try just by throwing the numbers out there, What is your best advice on how to not be biased while scalping? Oh, geez. Locked and loaded question, huh? It's interesting to see how even the amount of short on long trades you took for the week. Yeah. The overall bias, what it really comes down to is just understanding the fact that when you're wrong in your trade plan, right? And a lot of it does come down to trade plan. I will be straightforward there. You do have to have an understanding of what you're getting into and what your expectations are. Granted, lately the NASDAQ has been surpassing those expectations, but let me show you an example, right? So earlier this morning, our expectation, like we were talking about, is that this was an ABCD corrective phase down. The corrective phase to the downside has already completed to a 1.21. If I'm going to be going short here, I need to be in context, and I'm a scalper, right? The only way that I'm going to be able to get this to go in my favor is to risk a lot more than I'm willing to make in favor of getting the probability on my side. So my expectation is an immediate drop basically to my target, and that's what happened. Now, could I have held on for more? Sure. Of course I could have, but that wasn't my expectation. Hindsight, you can let it beat you up if you want to, but now there will be times like when I tried starting to pick up on the reversal because again, excuse me, we had completed that major ABCD completion to the downside, and this is where, on the bigger picture, buyers were trying to pick it up as well, from a structural standpoint. Tried buying into that move, and it failed. Right? It didn't work. It did not work in my favor, and I had to exit when I realized I was wrong. Now, in hindsight, could I have stuck in there and allowed that to be a break-even trade? Yeah, definitely. But understand the risk, because if this falls off, where's the next spot that it's going to hold? 1650. So you have to ask yourself, if I'm looking for this to do one thing, am I willing to say, I'll hold it down here? If I hold it down here, is the context of my reasoning sound? No, absolutely not. So I have zero reason to be long anymore when they start plotting those bear bars. Remember, the likelihood of success on the trade, if I'm looking for a swing to the upside, is 36, 37%. I'm going to be wrong more often than I'm right. I know that. So I try to mitigate those losses as early as I can. This time around, I could have bought the dip, bought more, and allowed the market to go back up. Sure, hindsight 2020, welcome to life. It's not perfect every time. But when I realize that I'm wrong, I'm not going to hang out. Now, here's the thing. When I thought I was wrong, I wasn't wrong. The market jerked back up. What did I do? Wait a minute. I wasn't wrong? I'll get back in. There's no questioning, because I know that if I was not wrong, then my earlier assumption of this trade is still correct. I exited early for nothing. I took a ding for nothing. Welcome to life. But I still have a reason to be long in this trade. The pure invalidation would be below the lows. That didn't happen. So you re-up into it. Now, I did keep I kept the risk light, right? Because I knew I had just gotten out of another one over here. And if I get this trade going and it's a 2-to-1, like I'm hoping, that mitigates my entire loss from earlier on a 2-contract loss with just one. I'm okay with that. That's fine. Now, I wasn't expecting it to go all the way up here. My expectation was for it to stop here and probably cycle into a wedge. You could see it starting already. But it just rifled through. So, if you've got more contracts, and cool, icing on the cake. But you've got to have those expectations ahead of time of what you're looking for in terms of the market. Like right here, if I'm trying to buy the dip, my assumption here is that these sellers don't have a case. I don't believe them. So if that's the case, then I'm going to buy into them. If I'm wrong, then I'll see a bear bar down here, probably followed up with another bear bar, time to GTFO. I was wrong. Or adjust my management or do something different, Could you explain why you would enter the ES there for a 2-to-1? Sure. So as far as the S&P is concerned, the major consideration that we have here, first off, is that we have an outside gap to the upside. An outside gap to the upside, we're looking at, okay, well, maybe this outside gap up is trying to reach out and tag an objective. Let's look at ABCDs. Oh, okay. Well, the ABCD, we gapped above that too. So if buyers were long from this dip, and they were buying anywhere. If they bought here, even if they bought the close, doesn't matter. We gapped above major objectives, so they're probably going to take profit. My first assumption is, watch out. Let's see what happens here. Terrible bear bar. It's just absolute garbage. The POC was under it. It was closing above it. The sellers had barely an argument. And the next candle, bar 2, nice strong bear bar back down. Okay, maybe they're trying to close in this gap a little bit. What did they follow it up with? A bull bar right back up. Again, sellers have zero follow through. The bulls try rallying back up. They don't make it up through a new high. They double top and cycle back down with a bear bar. Well, wait a minute. Okay, let's put this in context. We thought the bulls were taking over and we thought the bears were failing. Why did they stop on a double top with a strong bear bar? Bulls might get shaken out of their longs and sellers might opt to try to take that for a scalp. Right, so if you're looking at it from a scalper's perspective to the downside, you're looking at about a 0.5-to-1 with a little bit of a front run. Obviously, they got the front run. If you're going all the way down, they even got the full-size scalp, all of them. So scalpers were satisfied to the downside. Totally different story than what we saw in the NASDAQ, by the way. The scalpers on the S&P were satisfied on the down move. So given the fact that they were satisfied on the down move and rotated back up above where? The 5-minute POC. Strong bull bar, terrible bear bar closing back above the 5-minute POC. Doji on the highs, a little bit of a bummer. Weak bear bar once again, strong bull bar back up. This is basically telling you all the sellers have already exited. They've already gotten all of their targets taken out, and the bulls are trying to get this to a continuation back to the upside. It's low probability, meaning that you have to go for a larger reward than your risk, right? That's the only way that it would make sense, which is why you would go for a 2-to-1. Statistically speaking, you're significantly better off with a low probability scenario going for a 2-to-1. It does not make sense going for a 1/2-to-1 here, as a scalper would. Primarily because even though the context is really good, you're still buying the top. It feels awkward. It feels real weird. I know, but a 2-to-1 just makes more sense. It's key to understand what he's saying. Cut your loss. Yeah, exactly. 100 million% agree. Think of it a different way, right? You know, a lot of people, and it's really easy to do, right? It's super easy. I know we're going on like major overtime now. But it's really, really easy to remember the losses and forget about the wins, especially when you're wrong 37% of the time, or you're right 37% of the time. I mean, it's really easy to forget about the winning trades. But you've got to think of the losses in a different way. They're not losses. They're not setbacks. They're not pullbacks in your P&L. I mean, yes, technically speaking, they are. But really, all they are stepping stones towards the next win. Because really, you're not going to get winning trades without losses on the way. Exactly. They're costs of doing business. They're stepping stones on the way to find those winning trades. It's just part of it. You got to walk down the path. And sometimes the path has brambles and branches and things that slap you in the face, you know? Think of it another way. Another analogy that we use pretty frequently is, you know, it's your inventory. And sometimes, as a business, if your cash flow or your account size is your inventory, the more inventory you have, the easier it is to do things, right? The less inventory you have, the less flexibility you have. Pretty common sense. So our goal is obviously to grow our inventory. Sometimes, though, as a business, you make a bad business call, a bad trade, a bad whatever. The goal is to mitigate those downfalls, those when they happen, because they will. It's part of business, right? They're stepping stones on the way to your targets. That's just the way that it works. You've just got to be okay with it and accept the fact that it's part of the path. The problem is people have a hard time accepting it while it's on the downturn. So, psychology is a funny thing, you know? Anyway, now that we've gone way massive overtime and without an extended session and rolled everything together, I think it was a really fruitful session. It was a great one going into a Friday. And like we always say going into a Friday as well, you know, make sure to get some rest. We make more decisions in one day than most people make in the course of a week. It's something that we need as humans, as creatures. We need mental rest. That way, you know, over the weekend, do something you find enjoyable, something else, a hobby, whatever. And come back on Monday ready to rock and roll, rested, refreshed, relaxed, all that fun stuff. Outside of that, though, as per the usual, if you have any questions that I may have missed, shoot me an email. I'll get those covered for you from there. Otherwise, enjoy the rest of the day. Rest up, and we will see you all on Monday, all right? Have a good one. We'll talk to y'all later. Thanks.